Face Warriors, how's everyone doing today? Of course, all the action again is in cable, but Euro continues to grind higher, retesting this 113 resistance over a lot of the short-term moving averages, above them both actually. 4-hour starting to get stretched. I don't see any reversal signature here yet. To fade this, I'm tempted to. You're going to have some type of fib retracements here. Maybe we're going to make it up to 1340. I know Paulie talked about some numbers yesterday. There is a line in the sand I want to talk about yesterday. I called the Turnaround Tuesday scalp in the oil when it was trading over. It was right here. And we did pull back to 60. So for crude bulls here, it does look like we're going to make that move up towards 58, 59, anyway, new highs. But your first sign that things are shifting is going to be back under 56.60, which was yesterday's just 4-hour pullback that we had from near the opening. Then for sure back under this 56.30, but it still looks like it's still a green light up there. S&Ps are continuing to make new recovery highs off of this rally. The only bearish thing I could see here right now is that it is potentially a 1, a 2, and a 3. It's weaker than NASDAQ. NASDAQ has the same formation, but here we're a little bit over 70. So if you're a high-risk trader, you just wait for the first reversal candle off of this, and then you have to wait for it to close depending upon your time frame. And then you go with the close of that reversal candle and risk the high of the move. That's one of the ways to trade a 3-driver. Looking over at the yen, we had a pretty good sell-off from the 1146 level, but now it looks like we're going to have another opportunity, possibly up at the 61.8 level would be nice, 111.60-ish. So we're about 20 pips away from where I would probe the short side of US dollar yen. This is an interesting decline in the Dixie. I never catch tops like this because of this. Too much momentum and it just turns into a grinding decline. We're at what could be between here and 6.5, pretty important for the dollar. We start taking this out, we could go all the way back down to 96, and it's in danger of putting in some type of top if it doesn't dig in its heels here. I would say 6.5 is going to be pretty important. That's where we started to accelerate over 6.5. So again, it's going to be EG. EG is working to the short side again today. And what do I want to wrap it with? Let's take a quick look at the metals. So, a lot of people couldn't wait to sell it. Gold up at the 1300 level, and they were rewarded a bit, but just a little pullback, higher low, and here we are marching again towards 1310, back above this trend line. But I know there's some willing sellers talking about 1310. Trend lines aren't a major part of how I look at things, but we came back and tagged it, pulled back, now we're back above it. So if we're not going to make a new high, gold has to stop between here and 13, I'd say 20. Start getting back over 20, you could start looking for new highs. And silver actually has a stronger chart, as you can see. Silver is on the verge of heading up towards 1580. It hasn't done anything wrong yet, so I'm not ready to short that either. Kind of come in today with not a lot of things that are compelling, but what's great about being a part of this team, and just a face webinar, but even more so being part of ForexAnalytix, is I don't have to come in with ideas every day, because all I have to do is go to my dashboard and see how others are navigating the market and get all the looks and everything I want to see. I could also take a look at some of the active patterns and plays here. And, you know, Stelios is cleaning up on NOK, and Blaker's doing well on CAD, and he's trying to do something here on the S&P, so we'll see. Okay, he trailed the stop, pulled it down. So, you know, if I come in with no ideas and I want to look at something like, you know, for example, the euro, see what Greg is saying here. And this is a 4-hour. So he allows for a little pullback from 13 up to, it looks like 1330 or so for 2, and then down. And back over 1420, the whole picture changes in euro. So that's a great advantage. The other advantage is I could be in the members chat right now, and they're all sharing different ideas. So really recommend you becoming part of the community, so that when you walk in with a blank slate and you don't have anything that you're seeing that's compelling, you have another 20 set of eyes between the analysts, and you know, another 200 eyes or better in the members chat. Okay, so the advantage is being able to collaborate with the community, and I think some of the best traders in the industry on the team for ForexAnalytix. How you doing today, Blake?
Good. Is it only Wednesday?
I know what you mean.
It's only Wednesday. How are you settling into your new digs?
Settling in. It's a little bit of an adjustment. You know, every time you move, it's an adjustment. But
for sure.
settling in, bro. Yeah.
I just went through the same thing. I know it is definitely an adjustment. So, well, you know, let's talk a little bit before. I was going to do something, and I, you know, it takes me. Speaking of like an adjustment, considering Steve's not here, and you know, I'm doing a lot of the broadcast before your interview. Do you have an interview today?
Yes, I do.
Okay. So, you know, it's like, oh, you know, I have all this time, and, you know, we brought in Paul yesterday, but one of the things that I used to do all the time is I would do a bias chart. Now, Paulie does the bias chart on the London
The European
crossover. Yeah, he does the bias chart, but I'm going to do it this morning. But before I do that, so I'm going to do it my style. You know, I'll put it with my levels up here. But before I do that, what I do want to talk about is the cable. Now, we talked about the cable, about how we're just kind of consolidating.
Still doing it.
Still consolidating. You know, a lot of people got pretty bearish yesterday because, you know, Theresa May's Brexit plan was voted down. And frankly, you know, I sat there and said to myself, and I think, you know, we talked about this yesterday, it was expected. So it's not like we were getting anything different than the market was expecting. No, she just, you know, tried to pull the wool over everybody's eyes. No one bought it. Everybody knew that, you know, her plan was destined to fail. Anyway, today is another important vote, is whether or not the UK leaves the EU with or without a Brexit. And if it's voted on that the EU leaves without a Brexit deal, I'm sorry, I meant to say deal if I didn't say it. It is early in the morning for me, and for Dale too. If they voted for, you know, to leave without a deal, then, you know, are we going to have an extension as well? So that'll be tomorrow. So there's, you know, obviously still votes ahead, and the market is consolidating. So the way I look at it now, and I'm going to just simply put up, you know, the bias chart right now, is where are support resistance levels that matter at this moment for the cable. And this is why we do a bias chart. So this way we have our levels right in front of us. So I would say this 132.65 level is going to be resistance, 132.65, and support right now for the cable is going to be 130. Okay, so, you know, you consider where we're going, you know, here to here to here, or here to here to here. We're probably going to be contained, right? So 130 is going to be support. Now, Pauly had these pink lines. I know Pauly really enjoys pink, but me not so much. So I like red. Pauly likes pink.
Pretty
Pink
in
Pauly.
pink.
Pink Pauly. Pretty and pink Pauly. So that's right.
Dale Pinkert.
Now, Pauly's going to be a little upset that I say that he likes pink, but, you know, we're going to get him a little pink Hot Wheels, a little roadster one of these days. So, so anyway, that's the cable. So before I go into the other, you know, majors here, and we can adjust this to range, to bullish, to bearish, to, you know, to whatever. But right now, it is range because we're in, you know, we're dealing with the cable, and we're obviously dealing in a triangle. So, you know, that's all I want to say about that. But before I go into the other charts, let's take a look at some of the pound pairs. So we drew this out with the yen yesterday, same triangle developing with the guppy. So if you are trading the guppy, then you should know that you know, we have resistance around 147 and a quarter, support around 144, you know, 40. So that's a pretty wide range. I mean, you're talking about a 300 pip range, but you got to, you know, deal with it. You know, do you really want to be a buyer when you're at 147.30? Probably not. You probably want to look to fade that move, or just see if it's going to, you know, turn there, or if you dip down to 144.50, you know, this is the place where you want to be a buyer. It's, you know, again, respect the triangle for now while we're in the middle of all these votes, because I doubt the what's going to move us out of the range is, in my opinion, is if we vote. There's a vote that we can leave with no deal, and then there's no extension. The pound's going to get killed. I mean, that's just, you know, it's plain and simple. All right. Flip side is if you know, today's vote passes, that the UK will not leave the EU without a Brexit deal, and then there's an extension, the pound's going to rally. I mean, you know, so we have to kind of get through tomorrow, in my opinion. That's why this range is going to be tight, and probably tightening until tomorrow. And tomorrow afternoon, late afternoon in New York session, is probably when we're going to see some sort of breakout or breakdown, and that's going to affect other pairs as well, obviously. And before I move on to the other pound pairs, Stelios is probably here. I just want to see if is there anything he wanted to mention to what I just said?
I am here. Good morning.
Speak your piece. No, speak your mind or forever hold your peace. No, speak your piece or forever hold your mind in your hand. What? So go ahead.
Okay. No, I mean, you covered most of it. Actually, the interesting thing, which I hadn't considered up to today, is that there might actually be another vote.
So, really? Is there something I missed?
Yeah, there's talks that even after today's vote, okay, it's going to fail, and tomorrow's maybe it passes. Maybe there could be another one on the 21st for a third potential deal that May brings to Parliament. This is just rumors so far, you know, from what I've heard and read. And the interesting thing to take away from yesterday's vote, it's not a huge deal, but on the first vote, it was a margin of 220 votes that May lost. I mean, she lost in a big way. Yesterday it was 149, so some are turning. And as our friend Simon very correctly said in the chat room, 75 more need to change their minds and it will pass. So it's not an easy task, but I don't think it's an impossible task, you know? So just something to keep in the back of our minds, that it might actually happen. Very low chance, but it might happen. You never know.
You know, people in the U.S., politicians in the U.S., I find them a little bit more, I wouldn't say intelligent, but strategic. If they know that something's not gonna pass, they don't even bring it. You know what I mean? So, like, if she knows it's destined to fail, why do it? I mean, I don't know. I don't even know why to go through the process and make us all, you know, die in the process. But it's, I don't know. Anyway. Yeah. Unless I was sure that it was going to pass, or I was pretty damn confident, I don't know if I'd bring it in front of Parliament again. But, you know, that's just me. So, but what do I know? I'm not a politician. but who knows?
Thank God you're not a politician.
Thank God I'm not. I elect you, Stelios. I elect you. Okay. Hey, thanks for that. Okay, so and Stelios, I'm going to bring you back in here in a little bit, but I want to go through all these majors, and we do have producer prices, by the way. We do have producer prices in PCE that's coming out, so stand by. Now, before I do that, let's talk about the euro pound. I got asked overnight if I stayed short the euro pound. I was short the euro pound yesterday afternoon. I've been, and just so you guys know, I've been scalping it short. It pops up to 86 and a quarter, I short it, and then I make 15, 20 pips and I get out of it, and it, yada yada yada. I've been doing it a lot, and it's good because it's been making up just a few gains here and there, which has been nice. Today I didn't hold the position overnight because I'm like, I just want to sleep. I didn't want to wake up in the middle of the night worried about my cable position or any type of pound position. So I didn't take advantage of it overnight. I was short at like last night. I think yesterday I had a short at like somewhere around here, like in the 30s. And then I closed it last night. No, I take that back. I was short like in the 40s, and then I closed it in the like 20 something, like 25, and I took some money out of it, and I'm like, yeah, that's great. And then I woke up this morning, I'm like, man, I could have made a lot more, another 30 pips, but I'm not really too worried about it. I'll look at it today as, okay, if we get back above 86.20, I'll probably start looking at it on the short side, and just kind of playing this range once again. Let's take a look at the pound Aussie and pound New Zealand, just because they have been extremely volatile. So I was chatting with Amanda, and she goes, is this a double top here? She asked me yesterday afternoon. I'm like, it's not a double top until you get below like some lows. So in this example, just looking at the pound Aussie, it's not a double bottom, or excuse me, double top, until you start breaking through the support. So I'm looking at that as being probably pretty key for the pound Aussie. Now, what's really going to tell me it's time to be bearish the pound Aussie is below this trend line, and not until. So you could go, all right, there is a double top here. Yes, I see it. But in all actuality, I wouldn't get bearish until we get below here, unless we get below there, not until we get, unless we get. Pound New Zealand, very whippy moves. I mean, these are 400 pip, 400, 500 pip moves, guys. I mean, 190 to 194, that's a 400 pip range, very whippy, and you could really get hurt if you're out here trading these ranges, so you gotta be very tactical when you're trading, the pound New Zealand or pound Aussie. I mean, look, pivot off the 618, I mean, that's been a 250 pip bounce just off the 618. We get back up to 194, be a seller, be a seller up here, and you got manageable risk up there. You don't have such manageable risk where we're currently at. We dip again, below 190. That might give you an opportunity to be on the long side, but trade it strategically, tactfully, and with precision. So, as we used to say in the Marine Corps, in the infantry, one shot, one kill. They don't give us full automatic rifles in the Marine Corps for every rifleman, because we have limited rounds and we don't want to expend all of our rounds in one shot. And believe me, I've seen people. I've been in live fire situations, and people just start shooting off rounds all over the place. And if they had an automatic weapon, it'd be, they'd spend it all, and then they have no ammo. So we do one shot, one kill. Same thing when you're trading. You very tactical, precision entries.
Nice metaphor, man.
Well, I mean, that's just, it's
and you know what? It's interesting that you're worried about running out of ammo, and that's why, because people think there's unlimited ammo on the battlefield.
Yeah, there isn't. I can guarantee it. I've actually had to give people magazines of ammunition because they just spent through everything. So, on live fire patrol. So we, this is the same thing with when you're trading, you don't have unlimited money.
Right.
99% of us
I've
don't.
learned that too.
Yeah, so you got to be very tactical when you're trading. Precision entries, and be very careful about what you're doing. So hopefully you guys understand that metaphor. Okay, now there's the pound New Zealand. Now I'm going to go through the majors. I'm going to start with the euro really quick, and remember we only got about 10 minutes here. So so the 618 retracement in the euro dollar is going to be at 113.28. I've been thinking that that's going to be pretty key resistance, and if you go like this here, you can just kind of do this. You can see that is going to be fairly strong resistance. So I'm going to write down 113.25 is resistance. And you know what? I am going to keep it as a range. I think support is going to be somewhere down here, back in the support zone. You can see the spike low down here. This is a little breakout point. See that spike low right here? Let's grab arrow. You can see right there. Whoops, that's not what I want to do. Let me do this correctly. You can see this little spike low here, these spikes through here. So this is going to be support right down through 112. I'll call it 112.35. It's going to be support. Okay, we are in a range. It's not, the euro's not bullish. It's not bearish. We're in a range. Okay, let's go over to the Aussie. Aussie, we had this inverted head and shoulder pattern, and frankly, this is pretty much played out. We talked about that. There's your neckline. There's your head to neck. There's your head to neck. So I mean, yeah, we almost basically completed it. 50% retracement also comes in at 71 cents. So I'm going to say that that's really key resistance here. And frankly, and I put an asterisk if I think it's important. Frankly, I think these lows are kind of important today. So 70.50, because that's the neckline, right? And I'm going to write that this is a bearish trend. I'd be more apt to be on the short side of the Aussie than the long side. Frankly, we could get all the way up here, and I'd still want to be on the short side. So even if we got up to 71.20, I'd still want to be short. So because we're overall just a pretty bearish trend. So I think it's just a matter of time before we break down. Hell, you got stocks that are stronger right now, and the market is still not participating on the upside as stocks are stronger. So here's the Kiwi. Now the Kiwi is in a nice triangle, pretty well behaved. I must admit, this is a pretty well behaved triangle. So you kind of know you don't kind of know, your parameters at this point. Unfortunately, we're pretty close to the middle of the range. So, spikes into new highs are probably going to get sold. 68.85, right? It's going to be resistance. 68.85. And then, support is, it's going to be down here probably initially. It was 67.88, but then you got 67.50. But I'll write down 67.90 for now. I think this is a range. Now, you notice that the New Zealand is a range, the Aussie's bearish. Well, that should automatically tell you that the Aussie New Zealand is bearish, and it is. I mean, we have a bear flag. For those of you that don't follow the Aussie New Zealand, I follow it pretty closely. A bearish wedge. The bearish wedge target is still at 102.50. So until we get to 102.50, I wouldn't even consider being on the long side of the Aussie New Zealand. So that means that if you go back to this bias chart, yeah, we're probably going to continue with the bearish trend in the Aussie, and we're going to continue to be range bound with the Kiwi. They can still both go down, but the Aussie's probably going to go down quicker than the Kiwi. Let's go over to the Canadian. I do have a long on the dollar Canadian. I established it yesterday. I picked up some dollar CAD at my average is like 133. I adjust my averages every day because I have to manually input them. But if I remember correctly, my cost average is somewhere around like 133.70. So yeah, I'm out of the money just a little bit, but I'm playing it as a pennant. This is a 38% retracement, so that 133.30 is very important support to me. That is a 38% retracement, and it's you know, you see a 38% retracement in a pennant. So meaning that this is what I'm looking at. It's a bullish pennant. As long as we stay, you know, above, and we can actually get all the way down to 133 before I start really kind of going, I might not be on the right side of this trade. But you got a 38% retracement coming down here. So picking up on the long side on these dips makes sense. Now, resistance, now this was previous resistance, was a breakout point, breakdown point. So that comes in at 33.80. So that's gonna be pennant resistance. So 133.80. And I still think that this is bullish, okay? And we're going to finish up the rest of these when we're done with this data that comes out. Here's a Swissy. Now, I was short the Swissy yesterday. I made a little bit of money being on the short side of the Swissy yesterday. I've been short. My average was like 101. I think I got out at 1.0078 or something like that. And it was only 20 some odd pips, but I actually still want to trade this thing on the short side. I still think that by the end of the week, we are going to have a failure of this, you know, this big trend line here. It's a big trend line, guys. It's a, you know, big, you know, multi-year trend line. A failure up here should lead to lower prices. Now we need some risk aversion sprinkled in order for this to really follow through. Because the euro's going higher, you know, it's back up at 113. The dollar Swiss is making its way lower, but at the same time, you know, we could be doing this. So before you get too aggressively short, this is one of the reasons why I'm like, you know, I'm just going to take my profits here for now. But support probably here at 1.00. I was looking at 10050. But really it's going to be right through here. 1.0035. And then resistance is going to be back up at 101 because even if we get all the way back up here, you know, we'll get some strong data today. Might take us back up to 101. And then I'm going to stop 1.0100. All right, and I'll continue on with the dollar yen. The rest of these dollar pairs when I get back, or not when I get back. I'm just going to stay here. But Stelios, calling all Stelioses.
Yes.
Well, I'm only going to get one of them. Yeah. What do we got going on?
We have durable goods orders and PPI out of the US. So you know, important numbers, especially PPI. I think it's a very good leading indicator, and we have to keep our eyes out on that one. What else do we have?
We have durable goods orders.
Yep. And then that's it. Then just crude oil inventory.
Then we can continue on. Then we can continue on in the Brexit madness, running around with our chickens with our heads cut off. You know, I'm looking at the dollar yen just ahead of this data. We got 2 minutes here, a little less than 2 minutes. This is the 50% retracement, 111.47. Now we can stretch that out to, you know, 111.60 on some good data, which is entirely possible. Now I was looking for this flag to break to the downside. It didn't. Even in Asian trade, we went down to 111.15 and then, you know, bounced right back. So
what's that average? Is that the 48 EMA? Is it?
This is the 48 EMA. Yeah.
Yeah. It seems to be bouncing off that. Yeah.
Yeah. It's you know, for those of you guys that the late Captain Ron used to use the 48 EMA quite a bit, and you know, we've kind of incorporated into our charts in memory of Captain Ron, good old Captain Ron. Let's see, one.
Okay.
Oops. Let me grab the Bloomberg here.
Yep, a few seconds ago. So
shoot, 0.4%. Durable goods. That's a good number.
Well, durable goods is better than expected. Core durable goods is worse than expected. So if you take out that part, and PPI is slightly worse than expected. So if you exclude transportation items, so core durable goods was lower than expected. Some good revisions. I think it should be, unfortunately, overall a nothing.
Yeah, and you look at the dollar yen, it is really a non-event at this moment.
Damn.
So, you know what this means? We're in Brexit hell. Damn it. Damn it. Continue on in Brexit hell. All right. So yeah, as you can see, that the numbers, little bit of offset here on the durable goods orders. CPI or PPI, excuse me, came in, a little weaker here. Inflation is going to continue to be an issue globally, and that's it's been kind of the mantra for the central banks for the last couple years. Like where's inflation at? You know what I mean?
Yeah.
I mean, it's like why hasn't it reared its ugly head thus far? And if it's not going to, or if it hasn't already, is it ever going to? So I don't know.
Blake, we've talked about this many times, especially with Steve. Reported inflation is one thing. Real life inflation is a completely different thing, because they've tweaked with the formulae, a million times in the last 20 years. And every time they tweak with it, somehow it manages to push inflation lower. So, the governments, they have an axe to keep inflation low because they have liabilities which are indexed to inflation. So they, they've removed things like medical care, education. You just can't remove that. But anyway, you can, exactly. And they increase the weight of the consumer electronics, which is a negative inflation. The usual. We've talked about this many times.
But still, we barbecued a big screen TV last night for dinner.
Hey, did you put the barbecue sauce on it as well?
Because it was cheaper than a steak.
Yeah, I know what you mean. I've said this on the webinar before. Actually, my MBA, which I took about 15 years ago, whatever it was, I can't remember now. It's gone up 4 times in price. If you annualize that up, it's not 2% inflation. Nowhere near.
And I mean, I actually am selling one kid to put my other kid through college. So, it's inflation, man. It's what's happening. And it's also, I mean, you talk about like medical costs. I don't work for anybody anymore. I mean, I trade for Gallows Capital, but that's not, a company, like working for, Chevron or, or Walmart or something where we don't have medical insurance. I pay out of my rear end for medical insurance, and most of the, I want to say most, a big portion of the United States is self-employed. I mean, we pay out our nose. So I remember explaining to Steve and Stelios how expensive my medical insurance was when I left the Wise Trade Group, which was Ally Financial, and how much I had to pay, and it's staggering, isn't it? Yeah, it is. All right. Anyway, and that definitely some sort of inflationary cost to me as a consumer. That's for sure.
Well, so anyway. As I said before, real life inflation is totally different to what we're seeing reported. I mean, that's undeniable. Nobody can say otherwise, I don't think.
Yeah, so. True. But let's get off this subject. Let's talk a little bit about these technicals. So, as far as the dollar yen goes, 111.50 is the 50% retracement. You can take the 618 up here and say 111.63 is going to be another resistance, which is slightly above. And I think in order for the US dollar Japanese yen to start showing any type of downside, we have to break below 111.15, which is right here. So I think that this is all doable at this point. I'm still looking for downside in the dollar yen, but you can get a rally into resistance here, especially stocks are still pretty strong, and I'll go into the equity markets when I'm done. Let's take a look at we did the dollar yen. Let's go over to the dollar mex. Now, I actually played this thing on the long side, and I started establishing longs yesterday. I have a pretty good cost average because I picked it up right here at the 618. But I added a little bit just a little while ago. I had an overnight order at 128.50, which actually got triggered just for another slice. I'm in about a half size position right now, so I'm not fully invested here. However, if you look at the dollar Mexican peso, we have this little up channel. We rejected. Okay, so let me get rid of this really quick, this fib. But we rejected the 38% retracement. We've come down. We're still longer term trying to work off of this 119. Or excuse me, I said 19 level. I think we're in this up channel that we're respecting. So for now, you have to go over here and say, well, take this low here to this high. Okay, you have the 618, and you can see this horizontal support right through here, right? So that comes in at 1921, 1925. So right now we should have some support all the way down to, let's just call it 1921. Okay, so dollar mex, 1921, that's going to be pretty key channel support. Resistance now on moves higher, should I be right and we get a little move higher, we should find resistance right up at 1946, which will be previous support here. So 1946 resistance. Oh, dollar yen. I didn't switch these. This is actually the dollar Swiss. Let me go back and make some adjustments really quick because I haven't been adjusting the buy. It's been a while since I've done this for a group. So dollar Swiss is actually, because we're right up against resistance, I'm going to keep it range. Dollar yen is also range bound too. I just wanted to make sure I double check. And I hate to say that we're in an uptrend because we're not. I mean, we are in an uptrend. I mean, we've been grinding higher, but the rejection here at this previous support, and because it's been a little V-shaped recovery, which I think is losing a lot of momentum, you can see how the daily relative strength is, starting to roll over. I'm going to keep that as a range versus bullish or bearish. Okay, let's go over to the dollar index. So the dollar index, big rejection off of this resistance over the weekend, and everybody knows if you've watched the week ahead video that's going to be pretty key. Okay, pretty key resistance there. But now what do you do with it? Because if you look at the dollar index, just kind of take away some of these fib levels and previous trend lines. I'll get rid of this. We don't need that either. What do you do with the dollar index? I mean, this right here is a range, and we're smack dab in the middle of the range. So I sure as hell don't feel like doing anything at the moment with the dollar index now. And that, that should say a lot about, what I want to do with the euro at the same time. It's like, do I really want to be a buyer here at 130 or 113, excuse me? If I didn't pick it up at 112, do I want to be a buyer now? I don't know. There's some support right through here. That comes in at 50% retracement, which comes in at 96.77. So I'm going to just say that that's support now. For now, resistance. Well, this is a little channel, which it very easily could be. It looks something like that, right? That means 97, as you can see, we had a real struggle getting above here. So 97 should probably be pretty good resistance. It's a pretty tight range, and it is what it is. I mean, it's not like, I'm showing you, something that's not what it is. Just really, it's a fairly tight range, and we're moving lower in this range. We'll see if we get some support on a dip down to 96.75, and if we do get a bounce, will 97 hold us? I think that this is going to be fairly substantial, and probably how we have to trade today. It's it's a day where the ranges are fairly tight. I woke up this morning and the first thing I did was yawn. So, that means that there's probably not a whole lot going on right now. So you got to, be cognizant of the tight ranges, as we get through these Brexit votes. Let's go over to the US dollar Norwegian krona really quick. And Stelios, I'm going to give you kudos again. Really nice short there. Again, as I said yesterday, I was a non-believer. But you got me to be a believer.
Well,
okay, so
it took some patience, because you said it yesterday. I was on the chat room saying I'm waiting for 880, and it was, I wanted to pull trigger before, but I thankfully sat on my hands. But yeah, I really believe in the trade. I really do.
Okay, well then your test of manlyhood is going to be somewhere right around here. I think for anybody who's bullish, they're going to try to hold this 78% retracement. It is a trend line. You got a double confluence of a 78% retracement. Nice little trend line that comes through. So that comes in at 857.80.
I am personally going to take a partial there, but on the pips that we have on the system, we don't do partials. So for the moment, I'm going to just let it be. But
right. When we do these patterns in play, I trade around, and as most of us do, we trade around these positions. It's like if I have a position on, it's not just a straight up, I'm buying, $1 million in currency, selling $1 million in currency, or buying 5 million in currency, selling 5. I might be running a position. And it doesn't matter if you're trading 10,000, you're trading your position, but in that position, I might say, okay, I'm going to take half off here. I'm going to put on, another smaller position here as it's dipping into some support. So I want to get, buy a little bit more as I think it's all going higher. Those types of things that's how we navigate through the markets. When we do these patterns in play, this is because it's more of a by the book type of, we're doing it based on, this support, that wave count, this pattern setup, and it doesn't account for, trading around a core position, which myself, I tend to trade more around a core position. I'm not a buy it and set it and forget it type of trader. And nor are most of us in the real world either. So that it's important to make that point. Like a great example is being long the dollar Canadian. I've traded the dollar Canadian on the long side probably about 4 times since I've put in this pattern in play, a week and a half ago. So that's just, you have to think about that. All right, now, if the US dollar Norwegian krona does bounce, I do believe that this resistance is going to be kind of sticky because it was previous support. You can see how we kind of rejected up here. So any move up to 865.80 should give us some resistance today. I'm going to say it's still in a range because, well, actually, you know what? It is in a range because we've created this matched high here. I want to keep it in a range. If we were continuously making higher highs and higher lows, and we were up until last week, I would have put in a bullish trend. But right now, I think we're plagued with a range at the moment, and we turn bearish if we get back below 843, which I know Stelios is having wet dreams about currently as we speak. Okay, so let's go over to the US dollar Swedish krona, and then we'll cover some of these cover some of these indices and maybe a couple crosses that you guys might have some questions on, and Coach can scan through the questions and see if there's anything. So here's the Swedish krona. As I had said, for I think was it Jane that asked about it 2 days ago. Look, if I'm going to play the dollar on the long side, I really want to play the US dollar Swedish krona long. And the reason why I say that is because this has been probably the best performing. The dollar has performed the best against the Swedish krona than most other European currencies. And I'm not necessarily a dollar bull. I'm not. But if I have to be, I think I'd want to be here. Now, that doesn't say that if the dollar does weaken across the board, which frankly, being short some dollar yen, I wouldn't mind if that happened. But if the dollar Swedish krona, we get a dollar reversal and the euro goes back to 115 and the cable goes to 136. Look, the US dollar Swedish krona could be a real big double top too. So I don't want to ignore the fact that it could, reverse. But right now, as it stands, it is still pretty damn strong. And I know I drew this as a flag, but this is also, pretty much a trend line you can respect. I think we'll have support at probably down here at 930, and resistance is going to be at, we have this spike high over here. You have a couple spikes up here. That was previous support. Then we broke down. So that's all around 941. Oops. So let's see, 941. And support is 930. So, and frankly, this is actually bullish. I know we kind of have a potential double top up here, but in a possible false breakout, but at the same time, we are still trending higher highs, higher lows, higher highs, higher lows. And it's interesting. Oops, that's not what I want to do. It's interesting. You look at the divergence between the Swedish krona and the Norwegian krona, and the Norwegian krona has held up a lot better than the Swedish krona, and that currency pair is, a lot of people call it the Nakisaki. Just one of the guys in my office does, and you'll notice the Norwegian krona has really outperformed the Swedish krona as of late. All right, and that could continue. I mean, look at this like longer term, kind of rounded reversal pattern. So that difference between the Swedish krona and the Norwegian krona might continue with we see a stronger US dollar Swedish krona and either a flat to weaker US dollar Norwegian krona. That would continue that reversal in the Nakisaki. Okay, so this is your bias chart for right now. And so if you guys want to take a picture of it, the way we used to do this in the past, when I used to do the morning edge for so many years, people would just take a picture of that chart, and this way you have your analysis ready for you as you go out throughout the day. Now remember, I'm doing this for you right now. Every morning, if you're a ForexAnalytix subscriber, I say every morning, it's like 1 o'clock in the morning for me, but early morning, European hours, it'd be around, mid-morning, late morning, depending on where you are in Europe. Paul Franco does the bias chart for you guys every single day, but you have to be a ForexAnalytix subscriber to listen into that webinar. It is for ForexAnalytix subscribers only, and he does it religiously. And like I told you guys yesterday, you heard Paul, he was on, he's really good about finding these levels to queue off of, and he does this, he does this trading gig for a living, and he's been doing that. That's how I found him many years ago. So, all right, now let's take a real quick look at the indices. It's a little frustrating. We have this, move out of this ascending wedge in the S&P. Looked like we were going to reverse really good. We got to the 200-day moving average, closed below it, even for the weekend, but on Friday we had this hammer, and the hammer is still playing out to the upside. Now, we are at a 78% retracement in the S&P. Momentum is slowing down. Relative strength is kind of, slowing down here. Is the S&P a good short right now? I think you could try taking a stab at it, but as you know, and if you've been following the S&P, trying to short the S&P in recent the last, since the beginning of the year has been very frustrating if you've been trying to do it. The downside follow through has been lacking, but at the same time, there's a ton of resistance up here. So, you might be able to take a stab at it and just keep your risk really tight. It's hard to get super bearish.
You have a little free driver there, Blake. If you look at the 4 hour, you had 3 stabs up here to that. See that? 1, 2, 3.
1, 2, 3.
Yeah. And the Aussie yen and Kiwi yen kind of had the same thing. So the risk off, especially Kiwi yen, looks like it could be rolling over here as well. And
yeah, it's possible. A
shot. Everything's a shot, isn't it?
It is. I mean, but as you know, shorting the stock market has been very, very tough since the beginning of the year. I mean, since the beginning of the year, this is what we've done.
I thought I had a victory going home Friday. There was a Bradley turn, but I did not expect this much strength. In one day, Monday, they got almost all of it back.
There's the things that we got to get through, Dale, really before this market sees any type of volatility, maybe even downside, is we have to get through Brexit. We have to, and I God hope we don't have an extension. If we have to prolong this another couple months, I'm going to really go Harry Carey on somebody. We've got that. Then we've got this China-U.S., these trade negotiations. Until we get past Brexit and China, this market is, unfortunately, the volatility is probably going to continue to stay low because everybody's looking for favorable outcomes for both. Everybody's looking for, the UK to leave the EU with some sort of deal in hand because it's good for everybody. It's good for Europe. It's going to be bad for Europe if the UK doesn't. It's going to be bad for the UK if they don't. So everybody's trying to work towards this common goal, as frustrating as it is. So everybody's expecting some sort of favorable outcome there, and everybody's expecting China to adhere to the US's terms, and we should get a favorable outcome in the trade deal, or at least come to some sort of trade deal. Now, do I think that the US-China trade deal is going to be good for China and good for the world? No, that's why I think the stock market is actually a short as soon as that is announced. But that's neither here nor there because we're not there. But until these two major events pass, the frustration and the waterboarding of all market participants will continue, in my opinion, and it sucks, doesn't it?
Hey, Blake.
I feel what? Hey, who's that? I have somebody speaking in my ear. Is that God?
We're hearing voices.
Is that God? God's speaking to me. You guys hear God? Holy cow! Is that Steve?
That's Steve. Yes.
Hey, Steve in New York. Look at you, the American. What's happening, Steve? How are you feeling after the last few days of torturing yourself on trade floors, which I'm talking about money show type of trade floor. I've done that on many occasions. How your feet feel?
I know you have. They don't feel yet. When I get the feeling back, I'm gonna let you know.
So one thing that I bet you came so prepared for the entire show. You did such a great job with the ForexAnalytix booth, organizing everything, and the one thing you forgot is to bring insoles for your shoes. And you're European, so you wore some really snazzy leather shoes with little soles in them that are like cardboard, and your feet hurt. Am I right? Or am I right?
It's not far away from truth.
Yeah, I wear tennis shoes, so for those things.
Yeah, actually, next time that's exactly what I'm gonna do.
So anyway, what's happening?
To begin with, I just want to say that a couple of things. One has to do with the S&P, since you had this conversation now. Everybody knew in the market that this 28.10, 28.15 level is key, and once we got the rejection from there. I'm pretty sure that there are a lot of people that started piling their shorts. So where have they placed their stop losses? We all know where, just above that area, right? So despite that temporary momentum loss, I agree with you, Blake. I do think that the path of least resistance remains higher, and these stops up there are very tasty, and I think that even temporarily the market would really want to squeeze them right before
Yeah,
they.
I mean, if volatility continues to stay low, then we're going to pop those stops. Now, the UK could vote to leave the EU without a deal today, and the S&Ps are going to be down 30 points.
I'm a little bit doubtful about that.
Me too, but I'm just saying.
Yeah, it is a possibility, but I think it's
yeah, I mean, if we continue on to this S&P waterboarding, yeah, we're probably going to continue over those highs. So anyway, and what else did you wanted to mention aside from the S&P?
I think there are some decent opportunities out there at the moment. Copper, for example, from what I was seeing earlier today, came down, retested the rectangle. We had a major breakout in copper. Yeah, it wasn't a head and shoulders formation, but it was a rectangle, a very nice rectangle. And we broke out from it, and this is a nice bull flag. Came down, almost retested the breakout area. So I do think that copper also looks good to the upside, and this is another potential sign that the S&P might squeeze a little bit higher, because we know the risk-on relationship between that both respond to risk-on, so they have a nice relationship with each other on occasion. So I think this is another decent opportunity. Gold, on the other hand, looks like a decent short to me. Near current levels. The previous move lower looked impulsive, so I do think that even if this is a correction, should produce one more leg to the downside. Yeah, I think that the 61.8 there at 1321 is the line in the sand for the bearish interpretation, and we're even approaching there the 200. Your moving average, whatever that is. And yeah, I do think that's a decent opportunity, and I also do think that USDMXN looks tasty to the downside. It seems that the corrective move higher is likely near completion. I do think that it can easily come down to retest the longer term symmetrical triangle, currently passing from like 1860 or something. So one more leg lower here, I would really like. I'm going to speak for some of those on Real Vision in a few hours. These are the things I'm monitoring at the moment.
Good. Well, thanks for joining us, Steve. I'm going to be passing things over to Dale. You travel home tomorrow, is that correct?
I actually leave at 5 minutes before midnight today, New York time.
Oh, okay. You're flying a red eye.
Yeah.
Great.
Yeah.
Well,
hopefully
then
I'm going to manage to get some sleep this time in the plane.
Yeah. Just, I know you don't drink alcohol much, but just get drunk. Nope. And then you fall out. You can fall asleep. Either that, or I'm a bumbling idiot throughout an entire flight. So, well, hopefully we'll get to see you on Friday, and if not, we understand because jet lag is jet lag. So we'll see how you do. All right, have a great time on Real Vision TV, and that's going to be great for everybody to watch. It's good to hear your voice, and glad that you made it back, or glad you did. Everything seemed like it turned out really great.
Yeah, nice to be here. Good morning to everybody.
All right, have a great day, Steve, and good luck today on Real Vision.
Great job, Steve. You and Joe and Greg at representing ForexAnalytix at the show. Thank you for traveling across the ocean to do it.
Well done, Steve.
It's my pleasure.
And Stelios, is there anything that you wanted to mention before we turn it over to Dale and his guest?
Not really. I just don't want to talk about Brexit anymore. Okay, let's leave that aside. I'm sick and tired of it. No, I'm kidding. But I have nothing else. I'm sorry.
All right, great. Well, thanks, Stelios, for being here. Steve, thanks for being for popping in. It's good to hear your voice. And Coach, it's all yours. I'm gonna let you take it for your guest. Have a great interview today.
Thank you so much, Blake. Great job. You haven't lost your touch, man, of talking for an hour.
Yeah, I forgot how to do it. All right, thanks, man.
All right, Arnaud, I see you, buddy. I'm really looking forward to talking to you again. You know, your last calls when you were here, they were spot on. So welcome back to Face, Arnaud. You're now the presenter. Just waiting for you to share your screen, drop down menu. There you are, surfboard sailing, nice waves, and waiting to hear your voice. Let's see if I have you muted. You're calling on the phone?
Hey, good morning, Dale.
Hi, Arnaud. Great to have you back.
Thank you so much. I'm glad it's working, and let's see what we can cover today, huh?
Yeah, so I see a stop sign up there. What should we do? Stop trading, stop averaging out, stop putting our stops too tight. What's the implication of the stop sign here?
The stop sign here, it's actually, it was an update on gold. I posted here for free to the public to stop listening to the talking heads on mainstream media that continuously seem to call the top and the bottom, but more as contrarian indicators, and instead start listening to the charts a little bit more and look at what the charts are telling us. That's why. So
I was just talking to somebody that I mentor in the diversity of opinions in gold. There's always diversity, but I mean, you have, conviction from some pretty good people on both sides of the market. And to me, it's like, neutral here. Are we going to break out over 1360, or if we take out the recent low, or are we going to 1250? I know you wanted to concentrate on SPX, but do you have a view here on gold? I know you have an expert on your team in gold, but since you started there, do you want to show it and tell us what your structure is, or do you want to go right to S&P?
No, we can go over it. I can quickly. So our expert is Michael Boysen. He joined me earlier this year, and he's covering gold, silver, platinum, and as well as some Forex, like US, US dollar, Canadian dollar, yen, that kind of stuff.
I did send him, Arnaud, I did send him a DM to try and arrange an interview for him, so maybe we could give that another try. But okay, so here we're looking at, we're looking at, is that the gold monthly? Okay.
Yes, yes, correct. So he has gold setting up in what I believe is currently a wave 2 decline, where we should have, I think right now, a counter trend rally followed by a lower low. And after that, we should be able to rally well over 1400 to complete a fifth wave, as Michael has it. So we have first wave up to fifth, the second wave down, possibly here, because it's almost like an equal low. And this looks a little bit like an odd, I would say smaller first wave, could be diagonal, but not necessarily. And now we should be working on, the third wave already, which is setting up again as a fractal, as a first and a second wave. So once this current ongoing correction should complete, then it should be really off to the races.
Okay, what's that moving average, the red line that you have there on the monthly? What are you using there? It looks like a red line, looks like a moving average. It's just underneath where the gold is now.
Yeah, there. I don't know which moving average that is. I'm sorry.
Okay, that's okay.
I won't be able to tell.
Right. I was wondering if that was right around the 1250 level for where this pullback might end, but that's okay. So basically,
right around there.
Is it? Okay, so basically look to buy this break in gold if, we trade under the recent low of 1280, you'd be a buyer.
Right.
Okay.
Right. Yes. Yeah.
Okay. So that's gold. I know you wanted to concentrate on the stock market, and I remember you did call that break. Nice call on that, Arno, that we had
Thank
in
you. Yeah.
December, the worst December since 31, I believe, or 34. And then you sent me a message and said, okay, that's probably it. For
Yep.
now, we'll see where we're at in the spring, and I believe we're
Yes.
only a week away from spring,
Yes.
the spring equinox, right? So the timing was great to have you back just before spring. Here we are.
Yeah. So let's go over what we have. So yeah, that was fall last year, and the reason why we're getting bearish was that it seemed like there was a nice complete picture into that high, with just a few more scribbles higher, so to say, and that the monthly charts were setting up negatively with negative divergence across the board. The weekly charts, because the rally here is the Nasdaq showing off the April lows was just very stop and go, right? Lots of stop and goes. So then we got into the end of December, and since then it's been pretty much straight up with very few down days. I think last week was pretty much one of the first weeks actually all major U.S. indices were down. That hasn't happened since December. I think.
Yeah, really, I thought that was going to be it. I mean, I'm not an Elliott Wave practitioner, but it was such an ugly weekly candle. I was pretty surprised. There was a Bradley date. I don't know if you follow that stuff, but I poo-pooed it. I said, well, normally I'd pay a lot of attention to a Bradley date, but I'll go with the weekly candle. I should have gone with the Bradley date. The NASDAQ so far is the only one that has negated the recent highs that we had last week. You still think that this is still a failing rally? We're not going to take out the highs that we put in. When was that? Well, aren't we above those highs in the NASDAQ 100? We are, but not in the NASDAQ.
Yes. No, NASDAQ hasn't reached over it yet. Probably it will if the NASDAQ 100 did it. Not necessarily, of course, but
Yeah, 72.10 was a high in the NASDAQ last week, and we're trading above it now.
Yes. Oh, okay. Yeah, and then we might as well go above it. The problem here is from Elliott Wave point of view, there's such little downside during this whole advance. It's a little arbitrary how to exactly count all these smaller waves because there's just it's pretty much been straight up with at the most 3 down days in a row, maybe 2 for some indices, and that's it. So that makes it pretty hard to count the advance from an Elliott Wave perspective in any way you want to slice or dice it, because then you can is this a 1 or is this the 1? Is this an A or is this the B? It just gets very
convoluted.
Yeah, convoluted. So if we go back here, once this correction in November, this is the Nasdaq again. Nasdaq was going on. I think by the time it broke early December, I said no, we should bottom around 6,300, 6,400, and we came pretty close. The Nasdaq bottomed at 6,200, so just a little overshoot. So my price target there was pretty good. I expected that to be a 3rd wave, and then we would get a 4th wave up, and then one more relapse lower to set up some nice positive divergences on many time frames. The daily MACD, the relative strength indicator, market breadth.
A lot of guys were looking for that retest, and so they watched it all the way up. And does it have any kind of meaning? The fact that what normally would have happened, a retest, is that inherent a market tell about just how strong or maybe manipulated the market is, that you normally would have had some kind of retest to see if that low was real?
Yeah, I wouldn't say manipulated. We do know that some people met over Christmas dinner to hammer out some things. So if you want to use that as a conspiracy theory, great, go ahead. It's, there's no, rules in the market that say it has to do this. It most often does happen at very important bottoms, that you just get a retest of the bottom. Either, just a little undershoot, or it just stays a couple of points above it, and then we get the takeoff because, the bears are just unable to push price lower. We get all these divergences, and that's when the market takes off. That just didn't happen. I think that took many by surprise. So
does your count change? Does your count change now that we're taking out last week's highs? It's not a failing rally.
Not really. So, using Elliott wave, I still think we could count the whole advance pretty nicely as 5 waves up. We have the first wave here, the red one, then we get wave 2 down, which was, quite a steep drop here in early January. We get a third wave up, and this one is around 1.382 extension. We get a drop to about 100% extension. So that fits Fibonacci pretty well. And then we have a clear 1, 2, 3, 4, 5 waves up off the mid-January low.
So could this new high, like last week, okay, so the decline from 5 that you're showing right here was last week's action, right? And you were calling it today. So if we take, which we have in the NASDAQ 100, took out last week's high, could that keep your count being a regular B at new highs?
Sure. Absolutely correct, Dale. And I mentioned it to my members over the weekend and before that, you just don't know beforehand what this B wave is going to do. You assume it's going to retrace up to 62%. That's just an assumption you have to make. But it can overshoot and become irregular, and it make new highs. It can go, in this case, I think on the NASDAQ, up to 7,800 without a problem, and then drop lower. I think that's something we saw in 2011 as well, just before the bigger crash happened. Now, I'm not going to say that's going to happen now, but there was, in my humble opinion, an irregular B wave before the larger C wave took hold. One of the reasons why I'm skeptical so far of this rally is when we go to market breadth. Let's go to that one for the NDX, and this can change, but so far it's just been an oversold rally. The market breadth yesterday was still negative. So we've seen 2 days of rally on negative breadth. Now that can change, of course, right? Today and tomorrow, it can become positive, and that helps the bulls. But so far, the rally to new highs has been on more declining than advancing stocks. Every single McClellan oscillator that I'm showing here for every index, this is for the Dow Jones, is negative. So here's -8. If we go to that for the NASDAQ itself, it's also -26 yesterday. So it's still so far been a rally on negative breadth that I always find suspect, especially when we get this late into a rally here. Same for the S&P and the NYSE. It's all negative breadth.
So all your internals are saying, despite price, the internals that you watch are not confirming the move.
No, correct. And it can change, right? Because price, of course, is the final arbiter. That's what we have to follow. But, like yesterday, the Dow Jones was down thanks to Boeing, because Boeing is, of course, the largest weighted price in the Dow. And, if you want to talk about manipulation, you just buy Boeing or sell Boeing and you move the Dow. That's it. There's nothing else to really, move that index as much as possible with one single stock. It's quite easy. If you so desire and want to talk about conspiracy theories. Let's not do that.
A lot of people say the Fed shorts vol products to try and put a cap on. You've heard that one too, right?
We've heard it all.
You've heard them all?
Who knows? Who knows?
Right.
In the end, it doesn't make me any money knowing that. I want to be on the right side of the trade. Anyway, so that's what we have, right? So as you can see here, for like almost 2 months, we had declining breadth, but price did keep on going higher and higher and higher. It takes a long time for the market to finally catch on that declining breadth where less and less stocks are participating. So,
Yes.
Last week wasn't really a surprise. I personally had a turn date for March 5th. Sorry, was it March 5th? Yeah, so that was on Tuesday last week, and the market turned on Monday. Now I have a turn date actually for today, so we'll see what happens if we can get a pop and a drop. Again, breadth is not really supporting this move yet. Another piece of evidence for the current up move is if I look at the 10-minute tick chart, right? The tick is the change in stocks going up and down. If we look at December, right? Here's the December low in 2018. Gobs of breadth. The tick is here well over 800, running in the thousands. For days on end, pretty much. This is on the 10-minute scale. After that, of course, it starts to taper off. We have a few more ticks here and there, but most of the time, as you can see, it stays above zero. So the breadth has been positive, and that's why market has been rallying. But this is really a kickoff wave here, right? This is really kicking off things. Now we're going to go to the last 2-3 days. Nothing. I see nothing, right? It barely moves over 500. That doesn't mean it can't go up short term, because breadth is still positive and relatively strong, but nothing compared to what we saw here in December. So that's another, I think, point that shows maybe if my count is wrong and this is a fifth wave, it fits the fifth wave scenario, or it is a B wave that could become irregular. There just doesn't seem to be enough strength in it yet. Again, maybe today that will change and we'll see the thousands on the chart. This is in a 10-minute resolution, so the 1 minute does have a few higher peaks, but the 10-minute just doesn't catch that. That could happen, but right now I just don't believe it yet. But we'll see what happens. Again, price is up and futures are up, and that's what it is. So, if we then go...
well, you're on pace today, and I saw a little 3 drive in the S&Ps and NASDAQ, so you probably get your reversal today. Because everyone all over the world's going to hear this interview and they're going to front run it. So, and it'll be forever on tape that you were here for the end of this this rally. But your bigger picture though is whether or not you participate if this break happens, you have a very bullish wave count. That if we do get this pullback, say it corrects half of the advance from the end of last year, you're looking for sharply higher prices. That's the bigger message, that all we're looking for right now is a correction of the advance, not new lows or anything like that.
No. And one of the reasons, so this is my preferred count. There's always 1 or 2 alternatives. So the preferred count is that we had a large fourth wave bottom in December with a irregular fourth wave starting in January. I can show, for example, if we go to the NYSA and the Dow Jones, the NYSA, I'd actually go to my website. I think I have a better overview there, where I say, why do I think we have a large fourth wave? Here's the NYSA. It's over a monthly time frame. We have a nice Elliott wave channel here. We have a clear ABC on the NYSE from January last year into December. Right? A, B. This is the whole advanced deal here. I'm going to zoom in from February to September, October. That's nothing. This is corrective flop. That's a B wave. I cannot count it any other.
Yeah, a bunch of overlaps, nothing impulsive, just kind of marked it a lot in time rather than price to work that sale.
Yes. Okay. So I know the S&P made a new high, the Dow Jones made a marginal new high, the NASDAQ and the Russell did as well. But they could actually, for example, the Russell was a clear 5 waves up, but they just simply are in a different count. It doesn't mean that one index is doing this, the other index is doing exactly the same. If that's the case, then there's no even a point to having the 2 different indices, because they're both exactly behaving the same. So here we clearly have something else. And the interesting thing here is in December, we had exactly the C is 1.618 times extension, correct?
Yeah.
So this is perfect, Fibonacci beauty. It just hit it perfectly. So this is A, and this is 1.6 times A. This is a perfect ABC correction, very large, fourth wave, in my humble opinion. We go back here to January for the NYA, and we see we have 5 waves up, 1, 2, and then subdividing third wave, 1, 2, 3. Again, the internals here, we get a perfect 1.674 extension for this green fifth wave, which is a classic fifth wave target. In the standard impulse, we have the 1.382 extension for the third wave, the green one here, hit. Now the fourth wave normally drops lower in those cases. Doesn't have to, so it's kind of bottomed here at the 100% extension. So this is a nice classic 5-wave pattern for this third wave. Now this fourth wave here, so the third wave for the larger third wave in this advance of January hit the 1.236 extension, pretty much to the dot, boing. Normally, I would then think the fourth wave would go lower. Again, the market was simply very bullish for whatever reasons, and instead thought, you know what, we're going to extend the crap out of this, and we did an extended fifth wave up to the 2.236 extension. Again, hit exactly to the T. So nothing weird really going on, looking in hindsight, of course, but this looks like a perfect finished impulse of the February low. Perfect. Then we have a perfect correction. I mean, A, B, C. I mean, I don't see anything else but a correction going on. So this tells me that this is most likely a finished fourth wave, and that we're therefore starting our fifth wave. Now, the gobs of breath we have seen over the last couple of months. I think the weekly McClellan oscillator for the Nasdaq set a new high, hasn't been seen since I think I have data. So that shows there was these gobs and gobs of breath going on, which is often the case in a kickoff wave. I think there was a Zweig breath thrust. I don't know if you've heard of it.
No.
It's from the late Marty Zweig, who said when the 10-day moving average of a breath indicator goes from minus 40% to plus 62% within 10 days. It's such a strong underlying market breath that it is often a kickoff wave, and then the statistics show that on average the market will gain I think around 25% over the next 10 to 12 months. So there's a lot of lines of underlying evidence that's would tell us that, well, hey, you know what, this probably will go higher even after correction, and after every fifth wave there's always a correction. So can it be that the whole correction is already over at last Friday's low? Yeah, it could be, but boy, that's really quick. I think a 2-3 months advance would take a little longer time to digest by the market before it can kick in gear to really.
Do you do anything with time corrections or
yes, I do.
Work?
Yeah. So I have my own cycle work as well. Let's see where I can find some of that. So those are actually just Fibonacci-based time series.
Okay.
So here I had one for March. Misspelled it, sorry. March 5th. So we got a turn on March 4th. The next one I have in a shorter term is March 25th. And then I have another one on March 23. The prior one was February 3, which was just before this little blip. Right. I didn't really catch this bottom here. I did here, for example, I had the November turn. I was close to the October turn. I had the October 3 top here. So there's plenty of evidence that the market is following this shorter term cycle. It's about a month long, I would say. It's a little bit based on the lunar calendar, but most of the time it's simply just price. And then
so I'm just making a guess here. If we do start topping in here, today, are you looking for the cycles that you had? Oh, you have a date here as well on the 13th to stretch time-wise into April for the end of 2 before 3, something like that?
Yes, absolutely correct, Dale. That's would be my preferred scenario. I've had it for 2 weeks now, and saying we would start topping around March 4th. That happened. We would decline into end of last week. I would have liked to see the decline really end on Monday, but I think everything got shifted by 1 day. Since my turn date was on March 5th, we had it on March 4th. So then, the next turn date would then have been, preferably on Monday. That didn't happen. So everything, I think, has got shifted a little bit. So
another waiver, I do a lot of intelligence. He was bothered by it was only last week's action was only a 3-wave move. And
yes,
that's why he thought we could, in S&Ps, take out 2820 before the correction begins.
Okay, yeah.
Are you in that camp?
Possible. I wouldn't be surprised to see this being a regular wave. So, the trapdoor is shot, the shorts are going to be squeezed that have probably been put just, at the 28.15 or 20, whatever it is.
Right.
And then, the trapdoor is set, and then we'll fall again.
Okay.
Into end of the month, because I have a turn date again on March 25th, I believe it was.
Okay.
Which I believe fits with some other turn dates as well.
I had a nice lead going into this week, and then this week I've been squeezed. My head has been squeezed so hard, my eyeballs were popping out. Like in a vice, So, all right. So, do you have anything, there's a lot of debate about the dollar. Arno, I know we didn't plan on talking about it, but it's pretty, is 97 the high? Are we going to break out through 97? Do we have to pull back to 94, Dixie? Has the euro bottomed at recent lows?
Oh, boy.
Yeah, that kind of stuff. So what are you thinking?
Let's see. Where do I have my dollar? I think the dollar.
You could go dollar or euro. That's U.S.
Yeah, it can still go
there
a
it
little
is.
higher. This is the U.S. dollar gold relationship.
Okay.
Long term. Let's see. Well, I think the dollar can still go a little higher because as we talked about with gold, we think it will go a little lower first before it takes off. That often means that the dollar will go a little higher before it drops. The dollar and gold are longer term, most of the time inversely related.
Not lately, though. Not lately, though. How do you explain that gold had this nice rally from 1160 to 1345, while the dollar was pretty much going up too?
Yeah, it happens. If you see here, there's no real relationship, for example, between 1990 and 1996, so 6 years of no relationship.
Okay.
A little bit here. So it happens, right? So these things are disconnected. For whatever reason it happens. I'm sure you can find some small blips that match up, but I think the longer term, bigger term picture is always, here we go. Dollar goes down, gold goes up, the dollar goes down, gold goes up, dollar goes down, gold goes up, and vice versa. But there are times where it's just not working, and I agree. Somehow here we have a drop in gold. Yeah, the U.S. dollar goes up, but gold goes up and dollar goes up. Yeah, so there's something. I don't know what the market is looking at. Why it both wants, why both likes gold and dollar at the same time. I don't know what the underlying mechanism is. I don't know what the play of the Federal Reserve in this is, because of course they are have the finger on the button for both. So I don't know what their role in this whole play is, but most of the time if the gold goes down, U.S. dollar tends to go up. But maybe we are in a time now where everything goes up. I don't know.
Well, how about gold goes up? Gold goes up against all fiat. Because before this recent rally, it was going up in almost every other currency term except the dollar. And now that it's going up against the dollar, that's kind of like, I guess you would call it great breath when it could perform against all fiats.
Yes. Yeah. No. Absolutely. And I think
that's a guess.
But I think it's a good guess. And gold has outperformed, I think, the stock market quite well. I think over the last decade or so. just on nominal, percent terms. It has rallied really strong. If you look, if you just simply look here from the year 2000 to where we are now, it's a fantastic. It's been a fantastic rally and increase. So it's gold is here to stay. I mean, this is a longer term, a strong looking chart. I see nothing yet that tells me this whole move is over. I mean, look at this advance. It's fantastic, and it seems like we're just kind of digesting this 10-year advance into the 2011 high, and these things take time. So we'll see what happens.
Okay, so if you covered all the markets and charts that you wanted to show us, have you?
Yeah, pretty much.
Okay.
So,
all right. Well, then, go ahead.
If you have 1 more minute, just real quick. So,
all the time you want.
Going back to the Nasdaq. So again, my preferred view is that we bottomed larger picture-wise for a fourth wave, and we're going to rally into a final fifth wave, maybe into 2020-21 before the new president is elected, and we'll see how the market will like the new president that's being elected. But that's just a hunch. That's again based on the premise of the market breadth and the Dow Jones and the New York Stock Exchange I showed. The other alternative is that we're actually still in a larger fourth wave. We're just simply going to kind of correct our way a little lower in some odd ways. And we'll get, and then again, a rally. So again, we get a drop, we get a rally, and here the bulls might think, oh, well, we have a third wave, but the market goes, no, it's just a C wave of a larger B wave. And then the rug is being pulled from under, and we still go below the December low before we rally. So that's also possible. So that, because it can be a 535 correction, correct? So just a larger 535. You never know if a 5 waves up in the beginning is an A wave or a first wave. Most likely a first wave, because the markets do trend higher longer term. So it's kind of, a little, odd to count it as an A wave, but it's absolutely possible. And we'll get a larger correction, something like here I've shown, and then a B wave that might take out the all-time highs or not, and then we drop. And after that is when we get a multi-year rally. And the last one, which is definitely not my preferred one, is possible. We already topped and we're working our way down to lower. It's possible, but I think breadth has been so strong, it's not arguing in favor. So these are my 3 options that I have and that I'm following. So we have 3. 1 is just instantly bearish. 2 are little intermediate term for the next 2 weeks, bearish, then bullish. So I think the odds favor a bullish outcome once this correction has passed. And that's what I'm looking at, bigger picture wise, and we'll just see how it plays out. But I prefer a little lower, buy there, and then see how far we rally, and move your stops off accordingly, and don't necessarily think it's going to be a third wave, but think about making money and move up your stops, because that's what we want to do. Just make your money. If the wave count is wrong and you still make money, that's better than your wave count being correct and losing money, right?
Exactly. So, what's your your doctorate in, your PhD in, Arno?
Oh, good question. I have a PhD in environmental sciences.
Okay.
So that has always been a lot of looking at temporal trends in data, right? Long-term trends like climate, what's going on with pollution in the environment. How's it trending? Seasonal adjustments because of rain, of temperature, of physical processes. So I've always looked a lot at patterns and trying to deconstruct patterns to understand, because most of the time, there's seasonality in patterns that you need to deconstruct if you want to do a linear analysis, for example. And that has helped me a lot in analyzing the markets, because the markets are quite seasonal as well, right? They follow cycles.
Right.
And they have patterns, and Elliott wave is a pattern. And I just found it very interesting to see that some of these patterns that we see in nature apply to the financial markets, seasonality, and that's just fantastic. And
are you in the global warming or upcoming new ice age camp? There's both.
Oh,
maybe you didn't hear about the upcoming ice age.
No, I'm not prepared. I'm not prepared.
All right. Anyway, I interviewed a guy who wrote a book about it. A lot of it has to do completely with the sun. Yeah.
Yeah, no, I saw that interview. I think it was really good. I mean, there's been no doubt, of course, been global warming. The question is, how much have humans attributed to it? And the science is not as clear cut as some other people want to make us believe it is. There's still a lot of uncertainty, and we still have a lot of time on our side to actually find out the science and make appropriate adjustments to our policies and economy if necessary. A quick 10-year fix to completely supposedly remodel our economy is, of course, going to be disastrous and impossible to do. And it's not necessary. The current rate of warming is not as alarming as some might make it believe. And there's still plenty of time for us humans, if we are the culprit, to do something about it. And I'm always for trying to clean up our mess. And I think we've done that greatly. I mean, if you look at the United States, how much cleaner the air and the water have gotten, for example, how much more energy efficient we've gotten, how much more miles we travel, in our cars with less gasoline and soon maybe all electric. It's fantastic. So I think the human progress should be always put forth first and above everything else before we start taking drastic measures to save the planet from something that science is not fully certain about yet. So that's my view. But
okay, well, it was really a pleasure talking to you, and thank you so much for sharing your 3 counts and equities and NASDAQ. And everyone, Arnaud's Twitter handle is @Intel INTELL_invest. What is your website address for people that are listening live now and for the video later, Arnaud?
All right. The website is investingintelligent.com. Let me pull it up here. And, so there's lots of good stuff on it. This is where you can sign up for my membership, which is now either for the major indices or the metals and the golds. You can sign up for my private Twitter account. This is private, where I just post my trades I make during the day. And you can sign up for it for a small fee. And then, as soon as I trade, I tweet it. And, if you have alert on your cell phone, you instantly get that alert. You can see when I buy and what I buy, what price, and when I sell. I mean, the delay is maybe a minute or two. And here I just post a lot of free stuff that I want to share with folks, where I think things are going, about Tesla, the S&P, gold, a little bit of everything. And just to kind of keep people, aware. And then, if I may do a little quick plug here, this is a website for my hedge fund that I started 2 years ago. It's called northcoastpartners.com. So if people want to join our hedge fund, which is currently doing really well, that'd be something that they could contact.
Compliance-wise, do people have to be, have a certain amount of net worth to participate in a hedge fund?
Yes, correct.
They have to be accredited investor?
Yes, correct. Yes, so you must be an accredited investor according to the U.S. Securities Act, yada yada yada.
Okay.
But for people that want to follow the market but don't actively want to trade, or just want to have a nice steady return, as I showed, we're doing almost north of 60% since the beginning of 2017, whereas the markets are not as hot. Longer term.
Nice green line, buddy.
Yes. Oh yeah, we paid our dues to make that work. Yeah. So that's the 2 things, and let's see what we get today. I'm very curious to see if we do get a turn in the market or not. That'd be fantastic. If not, then I'm gonna have to do more work.
Back to the drawing board. So
I know, back to the drawing board.
Arnaud, thank you so much for coming out and hanging out with us today, and I appreciate your views, and recommend that people at the minimum follow you on Twitter and go check you out. And congratulations on your hedge fund performance. May continue that green line become parabolic to the upside, like Bitcoin was going to 18,000.
Yeah.
So
no, we'll just go steady Eddie. That's our goal, steady Eddie. Yeah.
Well, that's great returns in that amount of time. Congratulations, and thank you again for edifying our community. Arnaud.
Thank you so much for having me again, Dale. Yeah, the 30 minutes is way too short.
Yeah, well, we went 40, so it's still too short, right? So anyway, yes. Thank you, my trading warrior brother. Good hunting, and let's keep in touch and get back together in the summer. How about
Sounds
that?
Good.
All right,
sounds
Arnaud.
Fantastic. Look forward to it.
All right, Arnaud. So that's a wrap, everyone. Remember, don't just, his Twitter again, Michael, is at Intel, INTELL_invest. And remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Enjoy the rest of your day. Adios. Good hunting. Thank you again, Arnaud.
Thank you.